Hi, please confirm if you're able to hear me in the comments. Just a minute. We'll be starting in 2 minutes. Hi everyone. We will be starting now. Thank you for joining in. Let me just check. Yeah, let me just check my position. So the account on the left, I started trading in the morning, and the account on the right is where I started trading in the like half an hour back. Right, I just took a position just to. So let's look at our positions again. So the account on the left, I took a position early morning, right, as soon as the market opened. The account on the right, the intention was I'll be showing a straddle here, so I didn't take a position in the morning. Now I will be shifting this to a straddle, right? Let's see. So let me first just make sure everything is visible and audible. Right, I'll answer all the questions. Let me just go over. I'll just change my position and to straddle, and then we look at the position. Right, so if I shift this here. Right now is at 43, so I'm gonna create a basket. I'm gonna shift to the strike that I want to buy is the current strike, which is at 43, and the one that I want to sell is around 43,300, 43,400. We want to do a strategy here, so we'll do 1100, 1100. Similarly, on the call side, the one that I want to sell is 43,400, and we'll do 1100 here. And the one that I want to buy is 43,700. So that should put me at a straddle of 43,400, right? And we are buying 43,300 on the put and 43,700 on the call. Let's go for it. When we do that, my price check should get unchecked. Yeah, and price difference I'm going to uncheck. We'll move the remaining as well. So I'm going to execute the remaining as well. Okay. Let me see why am I here. I'll move to closer. Okay, so this is fine. And this is at 22, so I'm gonna just do 22 now, and we'll try to here. Remaining is 1650, and change this to. So I think that should shift my complete position like I wanted. Okay, so now we are at a straddle, right? So the intention was I'll be showing straddle here. In the meantime, I'll just change this to 150 and 150 before I start thinking about what to do. I'll move my hedges as well. Let me, I want to buy a hedge. Let's just change this to 0. This to 0. Let's look at custom list, and I'm gonna look at the hedge, which is around 40. So 44, and this will be around 43. Maybe not 43. We'll do 42 500. That should be okay. And just buy 100 first, and then we will. So I bought 100 of these. I'm gonna now just shift my hedges to this. I like to do it manually. Right? There is a move option, but I'm more paranoid with going wrong. So, and then I'm going to shift square off half of hedges first. Yeah, so square off like this and the remaining this. Okay, so now hedges are closer. Let me rebalance the position again. So I'm now looking at, okay, let's just check if how much can I add. I'm just rebalancing the position here. I'm going to add 450 of hedges on both sides and we'll try to add. Okay, looks like I have margin because I moved the hedges closer. Okay, one more time and after the second. Okay, I was not using my margin previously properly. I think that just, yeah. So, okay, so the account on the left is a strangle, the account on the right is a straddle. Now looking at this at 125 and 125. Right, so I will be risking off if it goes above 125. I'm going to change this to minus 1.5 flat and target will be 5. Here I've already made decent, so because of that I'm coming closer. I auto update made my exit criteria to 0. So that's this. Okay, so this is where we are right now. Sure. Let me just go from top. If there's any question, black screen, okay, that is fine. No audio. You can hear me, right? Um, I think so. You can hear me. Uh, Can you explain a little about how you initiated the trades? Okay. So the morning, the first thing that I did was I wanted to be very safe, right? So I only took a position in one account, which is a straddle, yeah. And I started with 15 bucks each, if I remember correctly. Let me just check that. Just check the order history. Mhm. Okay, I'm not loading it because it is too much of data. Let me just see if I can. I'm just only loading the live one. I'm not loading the previous one. I'll share the order logs if you want. Right after this, I'll share the order log. But the intention was morning. I was personally expecting one-sided move trade. Right, so I was little reluctant in taking a position in all the accounts in the morning. So what I did is I took a very safe bet by selling for 15 bucks and mostly risking off not coming closer. Right, so I was hoping there will be a big move after 10:30 but that didn't happen and the premium decay was quite good. Right? Uh, so we were able to capture. So if you see the margin in both the accounts is the same, yeah, but we were able to capture close to 0.5% on this. And this right now, because I didn't take any position in the morning, I am just taking a straddle here to show how to manage a straddle. Right? Now for straddle, right, the current configuration, if you see, I'm saying move away when the price goes above 125 on the call and 125 on the put. When it moves away, the next price that I get, let's say the next price that I get is 80 bucks. Right? So then 80 bucks plus 50% of 80 is 120. The new price check value will automatically change to 120. So if the call moves and I get a new call at 80, the new price check value, because I have an auto update, will be 50% of the existing value at which I entered. So 80 bucks, assuming we entered at 80. So 80 plus 50% of 80 is 40. That becomes 120. So the call will automatically change to 120. If let's say the put had moved and put we got at 90, and 50% of 90 is 45, so it's going to go to 135. And so automatically the value needs to be updated when there's an adjustment, is what I've told the system now. Now on the system on the left, the same, where I'm saying either of the legs, because I have price check. Now price check works on all four. So whichever leg goes above 22, I want to risk off that leg. So this is me protecting myself and risking off. On top of it, a price difference is checked, but this you won't see a value here. When you don't see a value right next to this 20, that basically indicates that even if you have the automation on, it will not apply. The reason it will not apply is I have to have one call and one put for a price difference to initiate, because I need to compare a value of an LTP between a call and a put. Whatever is that difference will be displayed here right next to between the 20 and auto update, and that value is basically what we're comparing against the value that we've specified. So I'll show it here because we have one call, one put. I'll change this to 90 and I'll check this. So you can see on the right, you can see 2.6, 2.5, right? That basically is saying that what is the difference between an LTP of my call versus a put. If the LTP goes above 90, bring the one which is at a lower price closer. I'm not going to use that right now. I can have auto update enabled, but the automation is not updated. So auto update on a price difference basically says whenever an adjustment happens, whatever is the sell price, right? Whatever the sell price that you see, add the sell price, do a 50% of that, whatever the combined value. Right now the combined value is around 152. Right? So 152, 50% of that, which should be 70, 76. Right? So that's exactly what the value will come up. So if I do a refresh here, because I don't have this check. Let me see. Did I see 50%? How come it's not updating? 1 second. Change this, refresh. Let me change this to 52 and refresh. Okay, looks like why is it not updating? Users, if you're using the tool and if you see this is not updating, let me know. 76. Am I doing anything wrong? Let me change this to 90. We can check and check. This is odd. Okay. I'll have to check why the price difference is not updating in this. Let me quickly check that. Just give me a minute. Okay, let me fix the voice issue as well. Hello. Hello. Are you able to, is the sound better now? Can you see the comments? Is the sound better if you can confirm? Okay, perfect. Right. I'm just looking at the price difference. I'm just making sure I'm using the right version. I'll be back in 10 minutes. Okay, I'm just trying out a few things. Okay, so 125, 125. Where are we on this? So 10, 19, 122. It will risk off. Let me just. Okay, so the question was how come I put in 125? So we sold at 75, 75, right? Total is 150 around. So if let's say market starts moving up, like you can see currently it is balanced. The difference column basically shows what is the difference between an LTP versus the sell price at which I have sold. Right. So uh, 15, 15. So when the call is gaining 15, the put is also losing 15. So that's why my IMTM is not going to swing a lot. But when this goes to assume 30, right, then this will still be 30 roughly, right? But after 40, the skew will start coming up. So if the up move is consistent, right, I want to risk off instead of coming closer. Right? So what I'm going to also do is uh, right now I'm going to just use price check, right? So I only want to risk off if the up move is consistent, and on the call side I'll actually make it as 115, because generally what we've seen is the spike is brutal, right? So if you look at it, the price is still not working, as in is quite skewed right now. So that's why I want to be like on a risk off side. Given I'm doing a straddle. So on here it's quite safe, right? So here actually I'm going to look at whether I should come closer. So I'll just see if I can come closer to 15. Yeah, maybe I should. And so what I'm going to do is I'm going to move 1/4 first closer and see what the prices are like. 625 I've moved. Minus 22, which is fine. I'm going to uncheck this and also will move the remaining one. Okay. So now we are quite balanced. So we are at almost the same pricing. I'll just try and see if I can add more. Yeah, that's it. So it's quite balanced now on this triangle. So here, if you see, now the puts have started decaying. The puts are still at 62, where we are actually at 43, 400. So I think this is, yeah. Okay, so straddle is losing, is decaying quite a lot, which is good. Let me in the meantime look at questions. So the price value and the price check is hedges the ad hoc based on the value experiment or market. It's all market volatility, OI, support resistance, right? So I have to do a research at least one night before you take a position, right? So there is like an hour and a half of data analysis before deciding on. The straddle is abrupt, right? Straddle I'm taking it just to show that the what are the possibilities here in the tool. Right? So if I so another option to manage a straddle is through price action. So here in the price check, what we've said, if it goes above 115 on the call side, risk off. If it goes above, I'm going to change this to 115 here also. Okay, the risk off. Now, as soon as I change the value, this value applies. And when it risks off, whatever the new value that I get, add for 50% on top of it and use that as a price check value. So it will apply to individual leg. Now I have an option to use a price action as well. Right? So I can maybe do a 30 point. Let me think about it. Right? So the way we put the prices is, if there is a 30-point gain on the call, will my put lose 30 points? Most likely, yes. It has actually given up 11 points, where the call has only gained 5 to 6 points. Okay? So in all likely scenario, I will only adjust when both have either of the legs have gone 40 points up or down. And so the difference column basically works on the price action. So a call of, just to give you an example, if I do 38, what I'm saying that when the column difference column value, which is becomes right now it's 4, if it goes to 38, now 38 means 104, right? So 114, sorry. So 114, which is exactly what I was putting earlier for 115. Right? So I'm specifying 38 points. If this gains, I want to risk off call. If it loses 38 points, if the value is minus 38, that basically means that the market has reversed. Market is now going down. The call is losing value. I am okay to bring my calls closer. So when the same call goes from 76 to 38, right? So just to avoid confusion, I'll make it 40 again. If this goes to 36, because 76 minus 40 is 36, if it goes to 36, this will come closer. This position will come closer. So it works both ways. I'm not going to exit. If I select exit option, what I'm saying is whichever leg is losing the points that I've specified. For a call, if I specified 40 points, if the call is losing 40 points, basically means plus 40 here in the difference column, square of this leg, nothing else. It can be treated as a stop loss. तो प्राइस एक्शन में आप पॉइंट बताते हैं कि कितना पॉइंट का मूवमेंट अगर आ गया मेरी प्राइस में तो एक्शन परफॉर्म करना है. अगर 40 रखा है यहाँ पे तो 76 प्लस 40 इज 116. 116 अगर जाता है तो 116 अगर कॉल चला गया तो कॉल दूर चला जाएगा. वहीं अगर कॉल 36 चला गया तो पास आ जाएगा. तो दोनों साइड पे काम आता है प्राइस एक्शन.
Other seller, I'm sure. Anyway, bye.
Okay. Yes, so that's what the price check is. Let me look at the questions. The questions coming in audio recording, the questions coming in WhatsApp. So I'm just trying to look at. So it's 2 and 2 on each. Yes. So the morning, first thing that I saw was I was not expecting a sideways movement. Right? I was expecting a one-sided movement, mostly on the upside. Right? So I didn't take a position in one of the accounts. I took position only in one account. Right? I didn't take it in both the accounts, and I took a position of 15-15, which was 400 points away from the spot. Right? So it was more like just wanted to put a skin in the game. I didn't want to just stay away from the market for on both the accounts. So I took one account. I took one trade of 15 bucks. 15 bucks is what I looked at, and it was close to 400 points away on either side. So even if the market, I was not expecting a 400 point move today. I was expecting a 250, 150 point move in one direction and then stabilizing, and then maybe towards the second half another move. Right? So after 230 is where I thought I'm going to enter, but then decided to come online because there were quite a lot of requests coming in for coming in live. So that's the reason we're doing it now. So that, I think that answers your question. What was the logic? Can it do partial shifting automatically? No, sir. It can't do partial automatic, because what if there are, so next time, do you want to do a partial of partial? So we looked into that and we said, okay, how do you decide? Partial of what? Right? Is it the initial first time or the second time if the same rule breaks? Do you want to shift the remaining half, or do you want to shift the half of half? Right? So that's why I decided to avoid that confusion. And whenever what you're setting is purely premium based. How to automate premium based adjustments? Sure. Right. So there is a premium based adjustment right here. The price check that you see is actually premium based only. And so what I'm saying is, if sorry, the price action is purely premium based, right? So if the premium goes from 76, so if the LTP goes from, LTP is the premium, right? So if this goes to 116, I want to risk off. If it goes to 36, I want to come closer. If I want to do it purely on LTP basis, I can do a price check like I'm doing here, 22, 22. I'm saying that if the premium goes above 22, then risk off on the other leg. You can do based on combined, right? For that you have an option in the custom, right? So I can have a rule section, and I can do, if the combined premium is greater than or less than a certain value, then make an entry or exit, right? So I'm basically saying greater than, let's say 200, then go and sell this combination. And if I check this checkbox, this rule is now will be active, and basically whenever the combined premium goes above 200, this position of my, what is the position? Yeah. 43,400, 43,400 will be sold. I can basically buy also for somebody who's into buying. You can use it for buying as well. So you have premium based, but combined. We are introducing something which will be individual leg. Right. So in the next or the next release, we will have an option where instead of combined, you can do it on an individual leg and say, okay, if it's 100 right now, if it goes to 110, only then sell this option. Or for that matter, during an expiry towards the last leg of the day, right, the premium is, let's say, 50 paisa, right, and you sold at 3, but you're saying, okay, if it goes around 25 paisa, then just buy it back. I don't want to stay in the market for the last pennies, right? So then if it goes below 25 paisa, then it will automatically square off, but then you have to have a rule defined for that. Okay. Let me look at the questions. So a price action is purely with an exit, is purely like a stop loss. Okay. So when you say price action, so a price action, I'll repeat that. A price action is purely with an exit. You can treat that as a stop loss. So when this goes to from 76, I've currently sold at 76. If it goes to 116, I want to square off this position, then I can select an exit. Now, if it goes to 36, it's not going to come closer. So it is, earlier it used to, but in the current version that you're using, everybody asks that in the exit, we want this to be treated only as a stop loss. So when you select exit, the only action that it will perform will square off the losing leg by the number of points that you specified. Add that to your sell price. That same value is shown in the difference column. If that difference column is equal to the value that you've selected for, let's say, call, If the different column goes to 40, only then it will square off. Right? It will not come closer. Okay, looks like my timing was good. This was the straddle is actually doing pretty good. We will try and see if I can. Yeah, that's about it. We will. Okay, since I need this 440 again, we'll square off this 440. Okay, so on the second account on the triangle, because we are in a decent profit, I'm gonna take a slightly more risk where I'm gonna start moving this closer. So I'm just clicking on 1/4. It is moving 1/4 of my position. If I click on half, it's gonna move half of my position. If I click on 1, it's gonna move full position. Right? So I have the flexibility to move according to the rules that I have. Now on the put side, I'm gonna make it 24. On the call side, I'm gonna wait if I want to move this now, or should I wait? That's what I'm thinking. So when the call goes to 15 is when I would bring the remaining closer. Till then, I'm gonna stay put. Looking at the questions. So the position, whichever position loses 40 points, right? So somebody's asking, so if that 40 is set for call, then whenever a call, let's say call was sold at 100, if the call goes to 140, the call will risk off. Let's say you put in a 50 point for a put and you sold put for 100. When the put goes to 150, the put will square off. So this is purely on individual legs, right? It is not something to do with combined. Whichever leg starts losing, and if it starts losing by the number of points that you have specified in the price action, if you have an exit selected, it will square off that. So you can treat that as a stop loss. Okay, so this is when I will first move 1/4 of my calls, again 1/4, again 1/4, again 1/4, and this time we'll do half. And the remaining, I'm thinking I'll just, okay, let me just move. So my position is little skewed on the upside, which is actually not what I want. So I'm going to see if I'm able to add more. Not yet. Let's try and bring hedges now closer. For that, I have been doing this through basket, so I always prefer doing it through basket only. Buy is 42. Oh, sorry, I can do that here also. Let me just do 42 here. Look at the price. $2. Yeah, I'm okay to do it. Let's do it from here. We'll do individual and we'll just change this to, and I'm gonna just buy this 42,000 put. Remaining, I'm gonna do it. So I can take a look at the quantity and keep adding. I've added half. I'm gonna square off half of this. Add another 450, and that should be okay. Half, and we are done here. Okay, so hedges have been moved. This should give me an option to add more, like I said. Yeah, it does give me an option. We'll look at the call side as well. 44,500 is around $1. Yeah, which is fine. 44. This should be okay. I'm gonna do 4,000. Okay, I'll square off half from here. and then add another 4,000. Okay, so we have 8,000 hedges. I'm going to square off half and then remaining. That's all. So I think that should give me another buffer to add some more. Yeah, which is fine. So now my position is balanced. I'm going to add slightly on the call side if I can. Doesn't look like, which is fine. Okay, and here I'm now going to start rolling my exit PNL. So I'm going to basically say, let's say 6 lakhs for the day and currently 0, which is fine. You'll notice as soon as the valid values are provided, this gets enabled. This is valid all across, right? So wherever you look at, if it's disabled, only for the ones where you give a valid value, those will be enabled. So it's also a quick check, right, for the eye, what is enabled, what is not. If something is disabled, I haven't set that automation yet, right? I haven't used it even once. So you can see the put is losing more, the call is not gaining so much, right? So this is what it is. Looking at the questions as well. The booked P&L is over and above the current running P&L. Yes, because the positions that have closed, right? It is only showing the sum of all the closed positions. Right? Now I have some positions which are losing right now money, but end of the day, the sum. Even if you go to your ZERODHA account and you see, okay, what are the booked positions? If you add them, you will see it will match close to what is this, because I still have current positions. If the current position, one leg is losing, another leg is winning, at end of the day, the sum of the current P&L is sum of booked plus open. Yes, you can use both price check and price action. You can use both at a time. Right? There's no restriction. You can use all the automations that you want. Right? Whichever automation is valid, as in whichever criteria is met, it will perform that action. I don't take it. So I have zero knowledge in stocks. Right? I just look at whether the company is good enough, will it survive next 10 years, next 20 years. If the answer to that is yes, then it's a good company for me. That's all I look at. So sorry, won't be able to answer any stock based on question answers. Okay, let me look at the position. It went down and then up. Yeah, it's okay. Okay. If there are no questions, I'll just take a quick break. Spot difference, sure. Right. So currently we're doing everything price based, but a lot of times when I want to trade or somebody who wants to trade based on the spot, and so let's use spot difference in life right now. We'll say 80 points spot difference with allowing the money. Now, what is this doing? I'm telling the system right now I'm at 43,400, and if the spot goes to 43,480, my call is at 43,400. If the spot goes to 43,480, which is 80 points, so my strike 43,400 plus 80, that makes it 43,480. If the spot goes above that value, I want to risk off my call. That the market reverses right now, market starts going down, then what I'm telling the system is I only want to stay in that put till you subtract 80 from 43,400, that comes to 43,320. if the spot goes below 43,320, I want to risk off my puts. So when I'm doing a straddle, I basically created an 160 point range, right? 80 on the up, 80 on the down. If the market goes below 43,320, my puts will risk off. If the market starts going above 43,480, my call will risk off. So if it stays between the range of that 160 point, perfectly fine. And how did I come with 80? You look at the premiums right now, the premiums are the sum, the what I've sold at 76 plus 75, okay, is 150. I've added a 10 point buffer on top of it because the premium is saying right now the expected moves are between 75 point up, 75 point down. That's how everything is priced in your option. So they're saying 150 point is what the combined straddle premium is. So I've added 80 on 10 on top of it and put it as 80. Okay? So I hope that answers. Now, if I'm doing a strangle right now, okay, so we'll use spot difference in strangle as well. So right now, if you look at the strangle, we are 180 points on the call and 240 points or 230 points on the put side. Right? So this is the difference between it. I can say I want to risk off, then let's say 120, make it 120. When so we are close to, yeah, without allowing the money, this option basically tells me, let's say if the market starts moving up now, right? The difference between, so because I've unchecked allow in the money, I'm explicitly saying I want to stay away from the spot at least by 120 points. Right? So if spot moves up, I'm sitting at 43,600. If now, so earlier we were adding, now we subtract, right? So 4,3,600 minus 120, that puts at 43,480. Yeah? So if the bank nifty spot goes to 43,480, the difference between my strike and the spot is 120. If that difference is less than 120, I want to risk off that leg. So if the market starts going up, it crosses 43,480, it will risk off on my call side. Let's say, assume if the market reverses and market starts going down, what I'm saying is I want to stay at least 120 points away on the put side as well. So 43,200 plus 120 is 43,320. So if the spot goes below 43,320, my put will risk off. So plain and simple, I am defining how far I want to stay from the spot at any given point of time on both the sides. That value right now that I've defined is 120 on the strangle and 80 in the money on a straddle. Pradeep ji, I hope that answers your question. Okay, I'm going to take a 10-minute break and then we'll continue. Okay, so just to let you know that this is the XTS terminal on the left, right? And the MTM that you see and the position that you see are matching, right? So I think there are concerns whether it's paper trading or live trading, right? So I'm just sharing the screen here, and you can see that MTM is and the positions as well, right? So 41,400. So even if you want to look at the LTP, and all that is right here. So sell quantity, buy quantity. Right? So you can see 8,200, 8,200, 7,775 minus 8,200. So just okay. Now I'll take a break. Okay, before I take a break, sorry, let me just ensure my position is safeguarded. So what I've told the system is if it goes above 80, so I have a 160 point range in which if the market moves, I have nothing to worry. On the account in this triangle, I've said 24 and 22. Okay, I'm going to make this as 22, and spot difference is 120, which is fine. Let me make sure auto update exit PNL is also checked so that I'm protected if I go below zero. If I go below break even, I'm okay. I'm gonna just, and this one I'm gonna say 75. So this should change to 75 now. Or let it be 50. No, let it be 100. Yeah, that is okay. So basically now I'm gonna take a 10-minute break. I'll be back after 10 minutes. If you have any questions, you can leave your questions on the chat. I'll come back and look at the questions first and then we'll answer. Thank you, Mr. Kyle. Thank you, Kyle. Looking forward to you starting again. So hopefully it should help. Okay. Okay. Just backing it here. Okay, looks like positions have moved in both the accounts. Let me just take a look at what has happened. Okay, so there was an up move. Interesting. So there was an up move which caused the so the calls pressed off. If you can see, the positions have moved completely. The 8,200 quantity of the call completely risked off, ensuring that we stay up 80 points, right? So as soon as it went to 480 and above, for 5 ticks, it risked off my calls. So that's why we are protected here. On the account on the left, yes, even here we moved our calls away. Right? So even the calls, when the calls went, so there was a price check also of 22 points, right, on the call that went and auto updated prices 50% of 7 8, so around 12, which is 11. Okay, so which is fine. Now we look at what next. uh, we'll basically change this to 16 and 16. So total is 15. I'm changing it to 16. I have a spot difference of 120 still, which is okay. On this account right now, if the up move continues, we're still safe because I'm not bringing the puts closer. I have no automation here which is saying that bring the puts closer. I can. So I generally follow a style where I'm okay to risk off sooner. Uh, uh, Risking on can be taken at any point of time, but risking off is more important for me. Yes, that's okay. So if I had a price action selected, the calls would have come closer because they've lost in 40 more than 40 points. So, but then it was a little risky proposition for me, so I decided not to enable it, especially if you're not in front of the screen. Uh, yeah, on the strangle, it's still MTM is around that point, 1.5, 1 point, zero point 0.7, zero point 0.8. Is where here the MTM swing was quite huge because obviously for the straddle, you're gonna see this kind of MTM swings very often. Okay, so I've moved some position closer and I've stopped using spot difference because I didn't want it. I didn't want to take unwanted risk. And so if the up move continues, I wanted to at least protect to some extent. So that's why I moved 1/4 of my position first. I'll monitor it. If it goes back to 80, I'm okay. It will again risk off. It will go back. Right. So, but at least I wanted to balance my position, keeping risk in mind. I'm gonna move another 1/4. So now this is okay. Okay. Still a little skewed because I'm not expecting a down move. I'm more worried about the up move now. But even if the down move comes, right, I'm saying, okay, when it goes to 80, I want to risk off. Is it better now? If you could tell me in the comments. Okay, I'll just quickly look at the position. I haven't looked at the position. I was looking at this for quite some time. Uh, if audio is still not clear, you can just perfect. Good. So let's look at the position again. Where are we? Okay, so we said we will risk off it goes to 90.90. Auto update is minus 1 lakh. Position is fine. Hedges are still okay. Okay, straddle is looking fine. Triangle, we said 16.16, which is quite high right now for the place where we are. We'll make it 14. We said I'm gonna risk only use price check right now. Okay, we're at this is 42,200, 42,300 the put. 24 and 24 because I'm gonna move 1/4 first. If this goes to 14 is when I would move. Okay, so we said if it goes to 14 is when I will move maybe half of it. So, or it goes to 12. And so I'm looking at the put premiums. If it goes to 12, then we move it to 14 to 1/4 first, and then we'll see. In the meantime, in here we are okay. I think it is balanced out. Look at the difference. The difference tells you, right? The 5 points we have given up on the call. Sorry, 4 points we have given up on the put, but we've captured 5 points on the call. So which is still okay. Keeping an eye out on the put prices here. Yeah, I think I'll first start moving 1/4. If it goes above 14, yeah, I'm adding 15 remaining. Okay, well, looks like the puts will risk off, which is fine. So we back to 43,400 and 43,500 strangle here. And here we are okay. Oh, this is good. Okay, so this also goes to 60. Moving half of my calls now closer to balance it out, which it's going to be very skewed position. Moving the rest of the half up. Most likely I'm moving all of it now. Puts also are coming half closer. Remaining half. And then full quantity. In here, I'll wait for this to go to at least 14 again. And that's when I will move my rest of the calls closer. Let me see if there's any questions. Why is this better now? Okay, 40, 36, 17, 12, 4. So, like I said, if it goes to 14 is when I will move the remaining one. I don't want to enter at a bad price. The strangle we entered early, right, in the first 5 minutes. Straddle we entered around 11. Not even 11. So I started streaming live from 12, 10. So that's when I entered straddle. He actually went quite high as in 0.6%, and now with the up and the down move, the MTM has gone down again. I think time to move my calls closer again. one green candle and a move. It has to stay above 43,470, 70, 72. But this to go to 14. Okay, I'm gonna move it. So now let's see. Looking at the hedges, the hedge side, if I go to 42,500, it's 430 paisa. Let me just keep A5 quantity so that I can monitor it. If when I think it's the right point, I'll shift it. So 40 paisa. Yeah, another 15 minutes after that, I will shift. Auntie, auntie. Okay, I've shifted my hedges then closer. I'll just now 800 points away on the hedge and 900 points on the other side. Is fine. Here hedges are still okay. 500 points on the call. 900, 1100 points. Sorry, 900. Do a refresh. The prices are balanced. I can see how the decay is happening on both sides. Similarly here, do a refresh once. Okay, so price check out 24. Is it okay? Yeah, it is okay. The idea is it has to be a sustained up move. Here 60 is also fine. I'll use a price difference of, yeah, that's fine. So if another 10-point up move comes in, 10 points will be 54. So I'll have to make it 26. 26. Then it will become a straddle again. So this time I'm saying I'm okay to risk on automatically. But if it goes beyond 60, I want to risk. Okay, taking a 10-minute break. Okay, before I leave the screen, just one last sanity check. What we've said is if this goes to, now I'm gonna make it as 18, 19, 19 because I'm not in front of the PC. So if it goes above 19, I'm okay to risk off. If this goes to 56 and 50, then I'm okay to risk off. I'm not gonna come closer automatically. It will only risk off, and the PNL is minus 1 lakh here. PNL is checked, auto update is checked. We are making 2 lakhs here, so the exit criteria is 1 lakh. Here we have said if it has gone to 0, I'm gonna change this to, okay, let it be. Okay, thank you. हाँ बेटा, अभी भी आ रही है क्या? Last 1 hour left on the market. Q1. Bring this to 18. And here is 80 is fine on the straddle. I'm not expecting a move now. I think it should be 50 points up, down, 50 points up, down. Okay to take a slightly more risk. But so, but the settings is always such that even if I lose a lot of money, so whatever is the risk appetite, stay beyond that. So the configuration is always such that even if the market makes 100-point move in either direction, we need to make sure that we don't end up losing a lot. If you have any questions, please let me know. I'll try to answer them now. If you have any questions, please let me know. I'll try to answer them. Okay, there has been issue with some XTS data, right? I just got a notification. So if you are using XTS APIs, and please monitor your positions very closely. Just to be safe, what I'm going to do is, in case if I feel that I don't want to take any more risk, my configuration is now going to change, and this is going to go to call a 16. I'm okay to risk off. And we know there could be an issue. Why wait for it to actually prop up and end up losing money? So this is just to protect myself. Now if call up, maybe 70. Just want to be very cautious. In here it's going to go to 70, 72. Okay. So on the left we started with triangle from 915 itself. I think between 915 to 920 is when I took the position. Took an auto entry, I think roughly around 15 bucks, with a hedges of 1 rupee. And the straddle we started in live only around 12:15 is when I started coming on live. So I was at a break even in the morning around 12, because I had not taken a position. I had just taken like 1,000 quantity of strangle, which was 5 bucks, but it was not paying. There was no, sorry, there was no return on it. So then from 12 o'clock we started doing a straddle, shifting it to strangle, then straddle, then strangle, straddle. That's where we're sitting right now. Okay, I didn't realize I added some where of the remaining. Good. I think we'll introduce 1/4 for the hedges also. I'm not going to add more to the call right now. We'll wait if the put goes back to 40 is when we'll add put. Okay, on the triangle we risked off more on a protective side here. This will now change it to 11 and 11. So sum is 10, and one goes to 11. The other 4 points I'm going to get from here. So anyway, I'm not going to take too much risk on this anymore. I'm going to focus on the straddle now, because we made a decent amount. If I look at the current value, we still have close to 80,000 to be made on this. So that puts us around 350, which is a decent amount for a day, doing a triangle and staying risk off mode completely. Okay? If things change around 3 is when I'll take a call to bring it closer or not. So we'll leave completely on the 3 o'clock move. So right now we are 100 points, 130 points on 170 points. Okay? What I'm going to do now is I'm going to just refresh, and I'm going to use price action now for 4 points. So this basically tells me now that if there is a 4 point, so this is equivalent, right? So if one goes to either of the leg goes to $1, I'm okay to come closer. That's exactly what it means, because risk off will happen, but the probability of one going to 9 is, and the other one not going to 1 is very low, because we are quite far off. Okay, on the straddle, a decent move again on the upside, but like we said, I'm not expecting 43,455 to breach. If it breaches for 43,555, a good chance of short covering move. A decent rally is expected. If that happens, then that could take market another 100, 150 point up. So in that scenario, that's why the call is 72. If another 30 point move up move comes in, we are risking off. We're not coming closer, but we're risking. If you have any ideas, any suggestions, what is your market read? Feel free to share it on the chat. What do you think? I may be completely wrong here, so maybe I'll learn a few things and make more money. Look at the chat if there's anything, any interesting facts that any of our viewers wants to share. Now the tricky thing is with price action is you have to still monitor it closely, because what happens if both goes to 1, then my position will come closer on both sides. And so I want to be very cautious when coming closer. Think twice before coming closer. I want to stay till all the way 330, and then re-entry becomes a problem. So if I exit, so the question that I'm is why not use exit? I have no intention of leaving the market, and I'm going to stay all the way till 325. So if I exit, then I have to look at the price again, enter again. Rather than that, I'll just risk off. After 3 o'clock, yes, exit during averaging would make a lot more sense, because there's nothing much left if you've captured a lot. Don't want to constantly monitor this triangle where there's $50 left here, and a small mistake will cost me. So sorry. Okay, so as soon as we touch the 2 mark, our exit P&L criteria changed to 1. So now if the market makes another sudden move, we know after 1 lakh it will start exiting, because my P&L checkbox is checked. So it was actually a very good day if I had started the day at 9:15. There's a good amount of decay in the first 1 hour, but I was caught up with something else, so I was not able to monitor the market. At my position here, another starts. The call is still quite expensive to look at it. The puts have given all, it's hardly 19-20 points versus 40-45 points. So there's still a fear of an upside. what is the price telling us. So the fear is actually correct. I don't want to be caught up in that mess. So I'm going to make it 66. Okay, we've made a chunk. So still fast. What I'm going to do is I'm going to make this as 19 and 19. Yeah, it's okay if it goes away, which is completely fine with me. Now this changes to 23. Both are 23. If the up move continues, 23 is actually quite close. Let's make it 26. 26. Gonna on the strangle, I'm gonna see if I can, not too much risk, but I'll take some amount of risk now. 1/4 and so which goes to 40. Start adding that. And now this is a tricky place to be in. Look at market is still expecting an up move. That's how the prices are. So it's extremely tricky to gonna risk off sooner. If I'm wrong, I don't want to be brutally in the price being wrong. 17 is okay on the put side. On the call side, we'll make it as 20. Let's look at a strangle. The strangle we are at 8 and 60. So there is a good amount of skew already on this. Okay, I'm gonna go to, because I've managed to make, I'm gonna go up to 21. Because I'm only on the half of it now, so in here, yeah, I'm not shifting my puts closer. No, I'm gonna stay as it is. Okay, it's gonna be off then. That doesn't, because 6 will change to 3 now. And then because number of ticks define how long do I want to wait. Taking a slightly riskier bet because I am sitting at a decent profit. I'm going to move all of it now, which is fine. And 21 is okay. Right here, if this goes to 12 is when I bring the puts close. Yeah. What is happening? This call still spiking. We have no risk off too soon. Caught up now. This is an expiry where call premiums are quite high. Thank you for. I've changed it to 3. I will change it to 2. It will also depend on which position, which strike I'm sitting on. Be governed with the closer. If I'm far off, the tick will actually go to 5. If I'm closer, then the tick will go to 2. One decent bit candle, unless as the averaging begins and people are expecting a really good, if that is the case, then the tick will go to 2. The values will still remain the same. This is the third time in an expiry where I'm noticing that the fear on the counter is way higher than the put side. Worst case scenario that I'm running in my head is makes a 30-point up move and then because the puts have given up, it's hardly anything $5. Puts won't be able to compensate for anything. It's a risky bet though, if you ask me. I'm gonna take risk in only one account. I'm gonna take risk in both accounts. What needs to go to 11 for me to shift right now? 5 points. Only shift if the call shifts away. Like I said, I think the call is fine. Completely okay. What did I do? It's 50%. Okay. I forgot to change this to 90%. That necessary brokerage charges. This is exactly what I was. It will go up. 3 minutes into averaging. Very tricky place to be in right now. If you're greedy, you will take up all the profits that you've made today since morning. But it's very tempting. But this is at 20, which is no way justified. So I'm greedy. If this is 20, I'm gonna just move 1/4 close. Greedy to a certain extent, not too much. If it again goes to 23, let's make it 24. I have a very small quantity now. 1950 is okay. I'm right. It's gonna pay off. Risk reward is willing to give 4 points for a red candle and averaging to start. Then it, I didn't expect this to update. Move auto update. Changing this to 2 ticks. Last minute. Okay. There's no up move. This should crash. Literally crash now. But the price is telling something else only. Okay. No point staying so far now. Doesn't look like. I'm not gonna do a straddle now. No, no way. This is a clear direction. Too risky. It basically means that the market is crazy. Into the averaging, this is good. Oh, Done. Done. Not very happy with the outcome. I think I could have done way better. The calls were like screaming and telling that there's an up move coming. I think last two expiries we were able to pick it up. This expiry I couldn't. In last expiry and the previous expiry I was able to monetize properly. This expiry I think not the best version of me. Not over till it's over, so keep an eye out. Five minutes into averaging, there's a questions I haven't looked at. Can you tell on the phone when below post 4 p.m.? Yes, we can connect after. Thank you, Ji Sunita ji. I think 3% is amazing. Sunita ji. Yeah, I think it's not a good performance. I think I could have done way better today. But thank you, sir. There's no juice left in the market. Okay, so strangle 3 lakhs, straddle at 2 lakhs. The 3 lakh is because we started the first tick in the market the first 5 minutes. This one we started from 15. Look at my other accounts. Yeah, pretty much same output in everywhere. I hope you enjoyed this expiry. Any questions? Since now the market is relaxed, you have something that you want me to cover, I can go ahead and cover that right now. Any specific use case, anything that you would do which we can help with, we'll be more than happy to answer that. It's for this to go to 9. This has to stay 40, 30. Right? Go and touch. That's the crazy part. So I'm not gonna be a victim of that because it's been 10 minutes into averaging. We've this again like last expiry. Right? Averaging is started. Market has been at least, if I look at the price right now of, so one way to look at this is 43,600. Itself is at 80. So if this closes 73,600 closes at 80.82, how can this close to 12? This make this as 13. I don't think so. This is happening. I don't want to be a victim here. This itself is around into. Wow. Penal. I have to uncheck though. It's just great. Uh, 95. The other one. Necessary stress. Average price is around still below 100. That's a, this goes above 100. Is very not gonna. Now the average comes to 95, 96. So this for, oh god, yeah. Maybe I took too much of risk. Yeah, this doesn't make any logical sense. So, yeah, I'm gonna do one crazy thing now. No, I'm not gonna do anything crazy. This is very bad. This is bad. So many people would have their stop losses would have hit because of this. Now this is at 96, 97. Okay, I'm gonna bring this close. This is me protecting myself now. Exactly. 10, 15, right? But then this to a certain extent or the other leg as well here. Make this 120 first. Half. Move the, let's look at, we are at 22, 20. Okay. This was brutal. So if this stays above, right, because we had a 100-point up move, right now it is still at 9900. Right? That means 99, 83. Look at the other account. right? Like even so that 100 points down. Oh, what a move. So let's say if you had left the market saying, okay, I'm done for the day. No, it's never like that. Now it's not going to 22. We have 15 minutes. For it to go to 22, it has to be above 760. 760, yeah. It has to 760. This move actually helped me increase the MTM because we shifted our puts at the right time. Not too soon, not too late. It was after a while there was no choice but to bring the puts closer. See, if you look at still the averaging is under 100. So this is where you look at the averaging, right? It's 99, right? So if in the money call is still priced at 96, right? So the put should actually be priced at $4 and this should be priced at 0. Right? So in total there is 16 bucks on the table. For 16 I'm willing to give 7. Okay from 1:3, still 1:3 risk reward. Now if I don't, the risk reward is wrong. Very nice, man. 2.7%, 1%, 2.2%. I am not able to trade on non-expiries, honestly speaking. Right? I used to trade every single day, but now I'm not getting time to trade on a non-expiry. So if any day when it's a non-expiry and if I'm actively trading, I will come online. So how much we can capture now? Right? We can capture close to 90. So we can end up at 3 here and around 3.8 here. So better than where we were, thanks to that up move. And we actually taking corrective action very fast. Right? If this 15 and 15 is fine. So now the thing is around 4, right? Which makes sense because we stayed above 43, 730, 720 for a considerable time. And this goes to bucks, bucks. I'm not gonna take too much of this now. 13 is fine. It's okay, we're still making more than what we were making 15 minutes back. So I hope you were able to manage this up move, because the market was telling, but it was not that crystal clear that it's going to be 120, 130 point up move. 20 point was where the put was. So sorry, the call was. So okay, 12 and 9 is fine here. 9, 11. Okay, so there's 8 point on the table, 4 points if on the call side. So as soon as this went down on a red candle, we are looking at 2 points. Right? I don't want to risk on the put side. Keep it 7. We have 7 points. Yeah, 11 is fine. 3 points I'm willing to give. 11, 11. Stay put. I don't have capture that last 60,000, because they're gonna average it right there. 96. 96 means 94 points. Don't want a red candle. Don't want a green candle now. The green candle now. Okay. Not good. Okay. I think it's gonna end. Both of them will be go to 1 piece. Another 5 point up move, and this will crash to 2. 2. Okay, we're done for the day. There's hardly, when we touch 350 here, I'm gonna start squaring off. We have 42 on this side. Averaging is at 95. Put goes to 9, we exit. Call goes to 5, we exit. Similarly, call goes to 5, and this goes. We exit. That's it. Holy moly! Averaging is exactly coming at 5, 6 points. If this goes up, this goes to 0. This goes to 92. Our stop loss hits. Okay, we're done for the day. In this account, we're done for the day. 4 and 4. That's all. In this account, we had 9, so that's why we're still here. But what I'm going to do is make this as 5 ticks. We are into last 7 minutes of averaging. If it goes there, it goes there. Yeah, that's it. Both at $3 now. Check the other account. Yeah, same outcome there as well. Exactly same outcome. Okay, let's look at the questions, comments. Thank you so much. Thank you so much. So the spot, if you look at the averaging, right? So this is a very good sign. Right? We actually risked off at a very good time, because now the average price, if you look at the put, would be around 14 bucks. We squared off at 6, 8, and 9. Right? This is now at 13 and 12. So we could have lost another 3-4 points there if we had not exited in time, because now the average price, because the call is at 86, so the put has to be at 14. Now that put is at 15. If you want to take a look at it, I can show you here. That put will be around 15 now, because the combine has to be 43.6. Sorry, 43.6. Am I saying 43 put only, right? What did we square off? 40. Oh, sorry, 43,700. Sorry. 700 is what we were sitting. Yeah, see, 14. So if you do a sum, right, this has to be 100. So if this is 86, this is 13. We squared off around 9, 8 and 9, right? So 4 more points into what quantity? 9,000 quantity is 36, right? 21. So 4. Yeah. Okay, sir. But this was brutal. I think a 100-point up move and then in the averaging coming back down is not something that we can manage easily. Have to keep looking at the prices. Okay, too much of can. Let's see if there's any question. Based on your observation, which day best risk reward? Sir, every day is best, sir. It's how you play it, right? So I'm not getting time to trade on weekdays, but if I get, I'll do trading on weekday as well. Expiry is definitely right. You can capture the most out on an expiry, but if you, the end of the day, what is risk reward, right? As in, if you are able to capture 10 points versus giving up only 3 points, yes, that's a good risk reward. Yes, market got a small victory over it. So it's, you have to be very humble with market, right? If you think you know everything, market will punish you badly. And I've paid my price, not once but multiple times. So market, I think market was kind to me the day I make money, and then when I get greedy, I lose money. Any questions around functionality? Anything that you want me to cover? There are last 2 minutes, and after that, we will wrap up for the day. I hope you had a good expiry and you ended up in decent profit. If the tool has been useful for you, feel free to share your comments, feedbacks. If you have any questions, you want to get back to us, you want to reach us, the number I can share is type. That's, we still have close to 62 people watching in 3 hours. Thank you so much for staying. Price check versus price action. Sure. Right. What is price check versus price action? Let's look at that. Let me close one window and open this. I'll make this as a full screen so that you can look at it. Okay. So a price check of 4. If this call, so let me put a different value. If the call goes to $3 and stays above $3 for 2 price updates, it will risk off. It's purely a risk off. Square off my existing position, as in buy this leg and then sell a leg which is points away, which is similarly on the put side. If the LTP goes, it will square off 43,600 and then take a new position, which is 43,500. So it's away from the spot. So that is purely price check, risking. If when you risk off, let's say you move to 100 points, right? The new position that you sold was at 100. If I do a price auto update of 90%, 90% of 100 is 90. 100 plus 90 is 190. A new price check value for that leg. If the call had moved, then the call was new price check will become 190. If you get one which at 10, then the price check will become 90. So based on what is the auto update value that you specify, you can specify any number of value. It's from all the way 10%. So if it was 10, 10% of 10 is 11, 1. So 1 plus 10 is 11. The new price check value will be 11. A price action, on the other hand, is you can use it to move on both directions. So a 40-point move. Right? Basically, if I do this and say 40 points, then if 100 goes to 140, it will risk off. If that same 100 LTP goes to 60, it will come closer. So it works both ways. If you're using a move option, I can choose a 60 here and say, let's say 60. If 100 goes to 160, then LTP I'm talking about, from 100 to 160, if it moves, it will move away. If from 100 it goes to 40, then it will come closer. Come closer as in this 43,700 will square off and come to 43,600. If I am risking off, then it will go to 43,800. Now you also have an exit option where you don't want to move, only the losing leg. So that 100, if it goes to 160, I want to just square off. If the 100 comes to 40, I don't want to come closer. Then use a exit option. Exit option, you can treat it as a stop loss. You sold something for 100. If it goes to 160, put a 60 point on the put. As soon as it goes to 160, it will square off. Similarly, 100 call, if it goes to 140, that 100 call, when it reaches 140, it will square off. So a price action has three things. Okay? You can be used as a stop loss. It can be used as a two-way moves, either on the plus coming closer to the spot or risking off. So I hope that answers your question. Okay, I'm so sorry, sir. Maybe I'm also very tired. I'll cover that. I have a video that I've prepared. I'll share that also as a comment on this YouTube. Right? So we'll do that as well. Thank you so much for staying all the way. I will try and have one session on Monday next week on a non-expiry day for FinVasia. Okay. Thank you again and hope you had a good day, and we'll see you again next time. Take care. Bye.